Here is a summary of Uber's Q2 2026 earnings call transcript, designed for clear and concise delivery. Introduction. Good morning, everyone, and welcome to Uber's second quarter 2026 earnings conference call. Today, we have Uber CEO, Dara Khosrowshahi, and CFO, Balaji Krishnamurthy with us. We will be discussing both GAAP and non-GAAP financial measures. CEO's opening remarks. Dara Khosrowshahi. Q2 was another outstanding quarter for Uber, marked by record audience and engagement, driving durable growth, expanding margins, and record cash generation. Our gross bookings grew 22% year-on-year to more than $58 billion, exceeding our guidance. This is our fourth consecutive quarter above 20% growth. This growth translated into significant operating leverage, with non-GAAP EPS growing 35% year-over-year. Even more impressively, our trailing 12-month free cash flow exceeded $10 billion for the first time in our history. These results empower us to continue investing from a position of strength across our priorities. Our acquisition of Delivery Hero is a prime example. This strategic move will expand our reach to nearly 100 markets, effectively doubling the number of markets where we can offer the full power of our platform across mobility and delivery. We believe this will create significant long-term shareholder value by bringing our technology and Uber One to millions more. We are also continuing to invest heavily in autonomous vehicles, AVs, one of the largest opportunities in Uber's history. The conversation around AVs has shifted from possibility to scalability, how broadly, reliably, and economically this technology can be deployed. We see the AV industry structure mirroring AI, with multiple frontier models emerging alongside an open-source ecosystem. AVs, as physical AI, are on a similar trajectory. We're seeing remarkable momentum across our partners, with significant progress in permits and scaling robotaxi services. Our ambition is clear: to become the world's leading commercialization platform for autonomous vehicles. In summary, we are executing with discipline today, while strategically building the capabilities that will define Uber's next decade of growth. Financial highlights and key metrics. Q2 2026, gross bookings, grew 22% year-on-year to over $58 billion. Non-GAAP EPS, grew 35% year-over-year. Trailing 12-month free cash flow exceeded $10 billion for the first time. Management's forecasts and future outlook: autonomous vehicles, AVs on track to be live in 15 cities by year-end 2026. Expecting launches with partners like Nuro, Lucid, Zoox, Wave, Baidu, Pony, and Verne in various cities globally. Anticipating Rivian in the market in 2027, potentially in San Francisco and Miami by 2028. Focus is on market launches, accelerating data collection for end-to-end models, and commercializing the AV model, with an emphasis on service quality and vehicle utilization. Significant investment of $10 billion over a multi-year period in AVs, covering software partners, equity investments, and bootstrapping infrastructure. Delivery business, optimistic about the potential of drones, which can significantly cut delivery times. Seeing an organic acceleration in the delivery business, with strong trends in the US and internationally. Gaining category position in all large markets. Reported delivery revenue margin is largely stable. US mobility acceleration. Expectations for US mobility to accelerate throughout the year are holding. Drivers include insurance tailwinds being reinvested in the market, particularly in California. Product innovation velocity in both premium and affordable offerings, and continued growth in sparse markets. Capital allocation. Steady return to normalized levels of share repurchases over months, not years, after a strategic pivot to M&A in Q2. Approximately $10 billion in free cash flow over the trailing 12 months, with about $3.5 billion in buybacks year-to-date. Deployed approximately $4 billion in Q2 for M&A, primarily for Delivery Hero stock. Significant risk factors. Autonomous vehicles, AV's regulatory environment, concerns about job loss, safety, congestion, and the need for smart, sustainable regulation that addresses all stakeholder needs. The pace of adoption and geographic expansion is influenced by policy. Competition, a plethora of newer players in the AV ecosystem, mirroring the AI space. Partnership dependence, the need to not be dependent on a single AV partner. Scalability and economics, the challenge of scaling AVs broadly, reliably, and economically. Brazil mobility, intensified competitive environment, particularly in the food delivery business, leading to increased costs for securing two-wheeler delivery supply. This impacts both delivery and mobility trip volumes. Integration of acquisitions, integrating larger and more complex assets like Delivery Hero, requiring a clear integration hypothesis, a proven playbook, and disciplined synergy underwriting. Headcount and overhead, balancing investments in AI and organizational effectiveness with managing headcount additions. Key highlights: record audience and engagement, durable growth and expanding margins, record cash generation, $10 billion plus trailing 12-month free cash flow. Successful acquisition of Delivery Hero to expand global reach. Significant investment and progress in autonomous vehicles, AVs. Strong momentum in U.S. mobility, driven by insurance tailwinds, product innovation, and sparse market growth. Record first-time user momentum, driven by low-cost products, sparse markets, cross-platform usage, and new product introductions, e.g., women preferred, Uber Teens. AI is showing productivity gains, particularly in developer output, and enhancing consumer experiences and monetization. Organic delivery business is accelerating, with strong U.S. and international trends. Successful integration of recent acquisitions, e.g., Trendyol Go, and planning for further consolidation, e.g., Getir. Positive outlook on Lucid's ability to meet vehicle commitments, supported by strategic partnerships and investor backing. Key lowlights: softness in Brazil mobility trips due to increased competition in the delivery sector, impacting two-wheeler supply costs. Optical impact on revenue take rate in the UK due to a business model change, although the net take rate remains stable. Most important statements from CEO and CFO Dara Khosrowshahi. CEO. Q2 was another outstanding quarter for Uber, with record audience and engagement, driving durable growth, expanding margins, and record cash generation. Our recently announced agreement to acquire Delivery Hero is a great example. The combination is going to expand our reach to nearly 100 markets. By bringing our technology and Uber One to millions more people, we believe this deal will create significant long-term shareholder value. Our ambition is straightforward: to become the world's leading commercialization platform for autonomous vehicles. We're executing with discipline today, while building the capabilities we believe will define Uber's next decade of growth. Regarding AI, it's going to be thousands of small hits and improvements to our ecosystem that's going to drive, we think, growth for the foreseeable future. Balaji Krishnamurthy, CFO. Regarding U.S. mobility, the momentum that we're seeing in the U.S. is consistent with the theme that we have been talking about since the beginning of the year, and it is far broader than any one-off event. Regarding overhead expenses, we have now shown a track record of being disciplined on headcount addition over multiple years. But as we have been going through this year, there are a couple of themes that we have been striking at the company. The first one is the investments we're making in AI. They should result in productivity gains, and that should allow us to be moderating some of the headcount additions. Regarding capital allocation, we are steadily looking to rebuild our share repurchase levels. I don't think this is a year away. We are talking about months, not years. Regarding delivery growth, underneath that, our organic delivery business is accelerating quite nicely. On the whole, you should see relatively healthy trends for delivery in the third quarter. In conclusion, Uber delivered an exceptionally strong Q2 2026, exceeding expectations with robust growth and record cash generation. The company is strategically investing in long-term growth drivers, like autonomous vehicles and the expansion of its delivery business, while demonstrating financial discipline. We look forward to continuing this momentum in the quarters ahead. Thank you.